Right, finally ready to go. So quite a lot to get through, so I'll try and skip through this quickly. Um, yeah, so we had this drop. We started to fall off. This is the S&P, sorry, start again. This is the S&P daily chart. We started to fall off on Friday 24th. Um, so last week we dropped and got picked up very quickly on that Monday. Went back on the Friday, we went right back into that drop zone and then dropped again. So we gapped down for 2 weeks in a row now. And but we dropped into a key ratio support level, a Fibonacci ratio support level. And bear in mind, most traders and particularly algorithms follow these ratios, then that is a crucial point. So if we hold here today, hang on. So if we hold here today, pull back to 59.50, that's my guess, and then do a proper full gap fill at 6,050, we could carry on and go to the upside. So this is potentially, what I'm trying to say is, long story short, what I'm saying is this is a 1, 2, 3 wave correction, which anybody follows the Elliott wave is a standard normal thing once move, I should say, not thing. Once you see big moves like this, all these little dips are getting bought, including a big move into a fresh new high, and then we've got a three-wave correction. So this is healthy as long as we don't close under that 59.50 anytime in the next day or two. So we've got Bank of England on Thursday. The market thinks it's a surefire thing. They are expecting all but one to vote for a rate drop to take us down to, I think it's 4.5% from 4.75. Correct me if I'm wrong. So that might bring some light relief to the markets and some light relief to consumers and investors. We'll see. It's not going to make a drastic difference, but every little helps, as a certain supermarket says. And so that's why at the moment, we got a potential head and shoulders here. And if this part of the shoulder holds and that part of the neckline holds, then we could come back to 61.32 and go and find these extensions, 62.30 and 63.56. All right, but like I said, if this bounce does not work, the gap fill fades, in other words, sells, then we could see this slip all the way back to these levels here. So what happens around here is crucial as we head into Bank of England and jobs. So that you can translate that thinking right through to NASDAQ. Same situation with NASDAQ. I'll update that chart shortly, not now. And Dow, and let's have the FTSE. Yeah, so the FTSE's had a really sweet move into 8,700, and here we are just pulling back into key line support. Any touch at that 84, 85 area is, I think, to be bought. I think this area down here is key, and if that comes down there and holds, then I think we're going to go back to the highs and potentially up there at 8,800 and beyond. Drop underneath this 83, sorry, 84, 85, and then this is going to peel right. So this pen is really slow. We're going to peel right the way back to 8,200, and if we can't hold 8,200, we are in trouble, and we're going to have a much deeper pullback. What do I think is going to happen? I think into April, May, I think we're going to come and test these highs. At that point, I think the market could be in trouble. But I can so easily be wrong if we start coming under this 8,500 in the next couple of days, and of course, end of the week. So bullish markets. These dips are getting bought, is my message to you at the moment. So we've had two gap downs in a row on the Asian opening, Sunday opening of the US markets. So we need to be on our toes and managing our risk. Dollar, right, let's get quickly into stocks. Before that, let's just talk very quickly about the dollar. So dollar gapped up. There's a safe haven. So we gapped up. Any pullback to 107.90 could see that push right back up and beyond. Gold, lovely pullback into support in the Asian period. And now we've made a new all-time high today. In fact, we made a new all-time high on Friday. So we look as if we're going to see 28.85 and then potentially 3,000. So any pullback, we may see 27.30. It seems hard to suggest we're going to see that now. So any pullback around about 27.75, I think is viable. Get your stop underneath 27.70 and see if that can pull itself up. Silver holding above 31.50 nicely. That's a great chart. And we look as if we're going to see 32.25 pretty quick. Pull back to 31.30 is the buy zone. And it looks as if we can get back to 35 in the coming days and weeks. And then if we can, we're going to see 38.40 soon. Well, I say soon after, in weeks following. I don't expect that to charge up. I certainly expect that to grind up. And what I'm going to look at now, I'm going to look at, let's just go straight to stocks. So stocks we've been talking about are following are as follows. I'll look at a slightly older list first. Right, let's look at things like stocks like BT is creeping up. So that push, I talked about well, I talked about 135. We've seen 138 recently. If at any stage we can get above 150, then look for 168, 179, and possibly £2. It's a slug. It's a takeover target, and this sector, well, certainly at the moment, is holding up because if we then switch to Vodafone, Vodafone's having a good day. So we've got this huge trend line which has formed from way back in December 23. We've come underneath it a couple of times, but this looks good. This is still viable. There's plenty of room for this to push up if I'm right. We've got the pullback at 68. If that holds, we should get above 75.80 and ultimately go and find the pound mark and potentially more. That's a very strong pattern, very strong chart pattern. If we can continue to close higher here, and the volume is increasing as well. Obviously, it certainly was last week. It's slowed down a little bit at the moment, but if this today's not bad, but that's a strong close today, a very strong close, right on the 200. These moving averages are 50 and 200. We've been looking at Prudential. So this is a good day to measure relative strength. Relative strength in face of a market that has, well, certainly the US market had a serious gap down, and yet these lows, these support levels are getting bought. This Pru needs to close above 675. Could well see a deeper pullback into 640, 650. But if I'm right, that we'll see these moving averages cross over, and we should see a move back to 750, £8 in the coming weeks, potentially into April, May. Let's look at other financials while we're on the subject, legal in general. Much deeper pullback. So this is showing quite a degree of weakness. That's a very weak close. That looks as if that could come all the way back to 225. That's a very tough area up there anyway. For some reason, Barclays is not on this list. Let's go to my. Let's stay on this list for a minute. Let's go and find Barclays. Start punching in any stocks you want to look at. So at this stage, yeah, Barclays is beginning to look like that needs a deeper pullback. Yeah, £3. It's hit the big £3. Any pullback to 273 is worth a shot. If we come back to 273 and hold, we should break above £3 in theory. Tell you what, let's look at this. Yeah, so we come into that first extension, 296, £3. If the pullback to 274 holds, we should go and see 325. So we've got a pattern. We've got a good wave pattern there, but we do potentially need. So I'm just looking at my pen. We do potentially need a third wave correction. If that holds, then we should go and find 296 and 325 and possibly more if that works out. So, yeah, we are seeing relative health. Direct line is still grinding higher after that takeover. I think Aviva are taking over. Right. So we looked at telecoms and financials. Let's look at oil, Shell. That's a pullback to. It looks as if that's going to pull back to 25.92. Again, if that holds, we should see 28. And BP, very similar pattern. I would reckon that will come and find £4 down there. If that holds, we should see 450, 460, and into the year, £5 plus. Yes, of course. Yeah, thanks for reminding me. Barclays had 2 days, if not more, of offline. Horrendous. Just around the tax deadline as well. Yeah, Tullow. Let's keep on the oil theme and look at Tullow. Whoa. Yeah, this is that 25 fell into that December 13 sell zone. Wow. I've not gone into this again. That's why I'm a bit surprised because I've not kept a check on it. This is not happy, is it? Yeah, you can see I thought that might go to 30, but so we did really well on the 3rd of Jan, and then we've got serious lower highs, and it's just gone off the shelf. And that was, and then we have experienced a real sort of breakdown. So we started to break down quite badly on the 22nd, and we're still looking low at this. And look at the volume. The volume's falling off as well. See, when we were climbing up here in the middle of January, the volume was not increasing. So there were signals there that that may not work. But I hadn't realized that is looking lower. That is not good. Moving on. Yeah, I've got a couple of favorite. I've got a new one I want to show you. This is a bit of a miss for me. IQE dropped to 8.5, and now we've just recently touched 16. Um, yeah, the CEO jumped ship down here on that drop. Started to build up here in December. That's a sweet move. I don't know, hesitated on that, and that's done well. Um, EasyJet. So we recently, last week we saw 516, pulling back to all we've done is pull back to the 200. That's very healthy. That's pretty healthy. As long as we don't start dropping under the big £5, if we come down to 490 and hold, that's fine. But start closing under £5, under 490, and then this may not work. Otherwise, we could be looking at 550, £6 and into 640, £7 if that works. So a weakness in oil would be a big favor in that one. What's that other one that you that's S3. S3 is not doing it. I don't know if are you in S3 or were you just watching it? I can't remember. Yeah, I mean this deep red close on the 28th, another lower close on the 29th. Back end of last week was poor, and here we find ourselves we just held 250 just. Volumes are showing more force to the downside. But on the plus side, if we can get above 265 in the next couple of days, then maybe this can do something. If we get above 265, then we'll have a quite a powerful chart pattern, which could take us back to £3, 313 and back to the drop zone. But that is struggling in no uncertain terms. That is struggling at the moment. Right, this is the one that I think so we had a buy signal down there on the 15th of Jan, new low, immediate close above. I think any pullback to 388, 385, and I think this one could maybe attempt to get back. I think we could see 430 and potentially move. If all goes well, we should go and find 520 and maybe more on this FH. What's it called again? I'll go and find out. Hang on. It is called Foresight Group. But that is definitely one to watch and take on any dip. So we've closed above the 50-day average. Volumes are not great, so I will be patient on this one. But I think that's doable. Right, go back to my more update list now. What else have I got? I was stopped out on that series power. I think it's higher than my stop out now. Advanced medical solutions are not doing great, which I'm still in. Seeing 240 and 230, and it's sold at both. Volumes are picking up. This is not looking, yeah, so that 230 was a decent resistance level. And here we are just hovering above the £2 mark. Um, Yeah, what in hindsight, I've been too greedy. 230 would have been a nice little profit, a quick profit. Because at the moment we are getting a series of lower highs on this. So if we stay underneath, yeah, look, we closed underneath a key support area today. So we could kind of see 190 on that. Well, I tell you what, if you're not in it and you're interested, if we come down to 190 and hold, I would start recommending that again. Start suggesting it, I should say. Um, right, anything else? Let me go and find my other list. Anything else you want to look at? How much on my screens? Put it away so I can see things. Right, here we go. What else did I want to look at? Okay, I'll show you that one in a second. I've talked about this one a couple of times in the recent past. I'll show it to you again, get an update on this. This is SSP, and the name of the organization is SSP Group. They have about a 25% chunk of a billion-dollar, multi-billion-dollar airport food retail market. So it's sitting on this support ratio with that this looking on. Okay, so we get more upside. We're looking at 193. You're currently 180, 179, 180. And into £2, £2 5, and maybe 220 plus on this SSP group. If you look at their balance sheet, they've got solid cash flow, solid financial management, and good potential. So we've already broken out from this 165 area. Now, if we close above 180, the pullback will be 175, stop underneath these lows, and then see if we can get to £2 plus on SSP group. Volumes are improving. The back end of last week, we had good volumes. We just pulled back into that Friday range. So relative strength as well in light of a bit of a shaky market today. Right, I'm done. So unless you want to look at anything else, I'm going to leave you now. Update on miners, Pan African doing well, Hostchild. Oh, this is a good pullback on Hostchild. So we were recently 250. Decent move up here on Thursday on volume. I think this Hostchild is a go. Anybody who's not in an oil stock and interested, I'll just do some more checks on this. But I think Hostchild is a buy. Right, no more questions coming in, so I'm going to leave it there. Thanks a lot for joining me. Tread carefully in this volatility, particularly as we head for jobs and Bank of England. And I'll let you know if I have any trade ideas during the week. Thanks, everybody.